All right, let's cut straight to it. If you've been following tech at all, even just casually, you know Nvidia isn't just a company.
Not at all.
It's basically the heartbeat of this whole AI revolution right now. Its chips are, well, they're the engines, powering everything. Data centers, research.
Groundbreaking stuff.
Exactly. So today we're doing a deep dive into the, frankly, frenzy around Nvidia's upcoming Q2 2026 earnings.
Mm-hmm.
We're going to dissect the pre-report analysis, what the market expects, and what might actually happen when those results land.
And it's not just about Nvidia's numbers, is it?
No, not at all. This company has become a real bellwether for the entire AI market's momentum.
You really can't overstate the stakes here. I mean, the market has priced in so much future success. It's incredible.
So this isn't just another earnings report.
Definitely not. This specific announcement, it could trigger a really volatile reaction, almost seismic, you could say, in the stock.
Feels like the whole tech world is holding its breath.
It really does.
Okay, so our mission today is simple. Give you a shortcut to understanding this pivotal moment. We've gathered the sharpest pre-report analyses, the consensus data.
Got a clear picture of the drivers.
Exactly what the experts are watching and, what those whisper numbers might be telling us.
Those are always interesting.
Or let's peel back the layers on this one.
Let's do it.
So Nvidia, the AI super engine, as many call it. And, yeah, for good reason. The stock's performance has been incredible, over 30% year-to-date gains.
Phenomenal.
Consistently hitting new all-time highs, most recently around, $184?
Around there, yeah.
But here's the interesting bit. The past month or so, it seems to have entered this consolidation phase, staying high but not pushing higher.
Right.
So why would a stock with that kind of momentum just pause? What's underpinning that super engine claim right now, especially with this pause?
Well, that consolidation, it's fascinating. It's not necessarily weakness. I think it reflects the market's extremely high expectations. Investors are sort of taking a wait-and-see approach just before this huge report. They're essentially pricing in near-perfect execution.
Near perfect. Wow.
Yeah, it's like, think of an Olympic athlete at the starting blocks. Everyone knows they're amazing.
Right.
But the expectation isn't just that they perform well, it's that they smash records. The market's already baked in so much good news. Now it's just waiting for Nvidia to deliver.
That's a great analogy.
Yeah.
Really captures the tension. So let's talk valuation then. That must embody these huge expectations.
Absolutely.
NVDA trades at a forward PE ratio of about 42x. Now, for anyone maybe less familiar, forward PE is just, stock price divided by expected earnings per share for the next year.
A forward-looking measure.
Right, and 42x is high. It signals big growth expectations. Now, you mentioned it might be lower than its 5-year average?
It actually is, slightly. But compared to the rest of the semiconductor industry, or its main rival, AMD...
It's still a significant premium.
Oh, a very significant premium. And that valuation, it doesn't just imply growth. It implies continued triple-digit percentage growth in their data center business.
Multiple digits.
Yeah.
Sustained.
Yes. And it assumes this long runway of just unabated demand for their AI accelerators. It's not just expecting more growth, it's expecting a continuation of these, frankly, unprecedented growth rates we've seen.
So it's not just chips people are betting on.
No, it's more than that. This belief, it isn't just about raw demand, it's also about NVIDIA's unique competitive advantages, especially their CUDA ecosystem.
Oh, the software side.
Exactly. That software platform, it effectively locks in developers, locks in users, makes their hardware incredibly sticky, resilient to price pressure even as rivals pop up.
The powerful moat.
It's a huge advantage in this industry. Very unique.
So the market's betting on the whole package, the ecosystem.
Yeah.
And investor sentiment seems totally aligned with that, right? Overwhelmingly bullish.
Completely. Wall Street consensus is strong buy.
And the price targets reflect that. Average analysts target around $215, some even stretching up to $270.
That's right. And you also see extremely high institutional ownership. The big money, they clearly believe in the story.
So what are they focused on? What's the recent chatter about?
Well, a lot of focus on the demand for the next big thing, the Blackwell platform.
Okay.
And crucially, can NVIDIA sustain these incredibly high gross margins they've been posting? That's a big question.
Right. With that kind of pressure, every single number is going to be under the microscope. So beyond the headlines, the revenue, the EPS, What are the critical KPIs? The ones that will really move the needle for Nvidia right now?
This is where it gets really intense. The absolute linchpin, the single most important metric, data center revenue, no question.
Okay, data center. What's the number people are looking for?
The official consensus estimate for Q2 is hovering around $24 billion. But, and this is important, the whisper number.
Ah, the unofficial expectation.
Exactly. That number among traders, institutions, it's probably closer to $25 billion.
Wow. So anything less than a significant beat on that $24 billion.
It's going to feel like a disappointment. A collective sigh from the market, yeah.
So even hitting the official number might not cut it if they don't meet that unwritten whisper target. That's a unique kind of pressure.
It really is. Then, the second critical metric, gross margins adjusted.
Okay.
The expectation here is that they stay incredibly high. We're talking high 70s, like 77%, maybe 78%.
And why is that so crucial beyond just profit?
Well, it's a key indicator of their pricing power, their technological dominance. These high margins, they're partly thanks to that CUDA integration we talked
A
about.
software flywheel.
Precisely. It makes their hardware indispensable. So any sign of margin compression, even a little bit, that would be a major red flag. Could signal rising competition, maybe a shift in demand.
Got it. So data center revenue tells us about the demand. Gross margins tell us about pricing power and tech edge for the past quarter.
Right.
What about looking forward? What's the third piece, perhaps the most crucial?
The third piece, and you could argue it's even more important than the Q2 results themselves, is the Q3 revenue guidance.
The forecast.
Yes. This tells us, essentially, is the AI growth story still accelerating? Or is there maybe a speed bump ahead?
So what's the consensus for Q3?
Right now, it's around $31 billion. But here's the thing. For the stock to actually move higher after earnings,
They need to beat that.
they'll likely need to guide for revenue of $32 billion or more. It's not just about what they did, it's about what they say they will do next quarter.
Okay, so data center is king. What about the other parts of the business? Gaming, automotive. Do they even matter in this report?
You know, long term, yes, they're important for diversification. But for this specific earnings report, they are very much secondary to the AI narrative.
So if gaming is weak, but data center kills it.
Weakness in gaming would likely get overlooked, yeah. Any upside there is just a bonus. All eyes are really, truly fixed on that AI story.
Okay, so it's not just hitting numbers, it's crushing them.
Yeah.
And then forecasting even more growth. It's that classic, maybe dreaded beat and raise scenario.
Exactly, the fuel for these high-flying tech stocks.
So walk us through this guidance high wire act. What are the different ways this could play out, and how might the market react?
It's a fascinating paradox, isn't it? Doing incredibly well isn't enough. You have to constantly exceed these sky-high expectations. So let's break down 3 scenarios.
Okay.
First, an inline report, meaning they meet Q2 estimates, maybe that $24 billion data center number, and guide Q3 just in line with the $31 billion consensus.
That sounds okay.
You'd think so, but in this environment, that would likely be treated as a miss.
A miss, even hitting the numbers.
Yes, because the momentum narrative gets broken. High growth investors, they see that as the first sign the growth cycle might be topping out. Stock probably sells off significantly.
Wow. So meeting expectations is basically failure here. That's brutal. It means analysts might start questioning if this acceleration can even continue.
Precisely. Which leads to the second scenario, raised guidance. This is what bulls need.
The minimum requirement.
Pretty much. A solid beat on Q2 revenue, say, over $29 billion total with strong data center. And crucially, raising that Q3 guidance into the $32 billion to $33 billion range. That keeps the engine humming.
And the third scenario.
What?
The nightmare.
The lowered scenario. Any guidance below consensus for Q3, that would be seen as a catastrophic failure to meet expectations. That could trigger a severe correction. Double-digit percentage drop, easily. The market tolerates very, very little slippage here.
Okay, so given all that, what are investors going to be listening for during the actual earnings call? Beyond the numbers in the press release, what specific details in the commentary matter?
Oh, the commentary is absolutely critical, beyond the hard numbers. First, investors need to hear, well, overwhelming confidence about Blackwell platform demand.
The next generation stuff.
Exactly. What's the demand look like?
Yeah.
The order book. Is the supply chain ready for these next-gen AI chips? You know, the ones promising even more power, more bandwidth for training those huge AI models.
Makes sense. What else?
Second, an update on supply constraints. We always hear about this, especially for key components like CoWoS packaging.
That advanced chip packaging tech.
Right. Crucial for their high-performance stuff. The key question really is, Can Nvidia actually get enough supply to meet what seems like just insatiable demand?
Always a bottleneck issue.
Always. And third, any commentary on competition in China, that gets parsed very closely. Updates on rivals AMD, Intel, custom silicon efforts from big tech, and of course, the impact of U.S. export restrictions on their China business.
Lots to unpack there. Okay, with all these factors swirling around, let's try to paint a picture for everyone listening. If things go well, what does the ultimate bull case scenario actually look like for the stock reaction?
The dream scenario for bulls,
Yeah.
a massive beaten race. We're talking Q2 data center revenue blowing past that $25 billion whisper number.
Fine.
And critically, Q3 revenue guidance coming in at $33 billion or even higher.
Wow.
Plus, gross margins holding strong, around 78%. And just really positive, confident commentary on the Blackwell ramp-up.
What would that signal to the market?
It would just unequivocally validate the whole thesis. The
Right.
AI build-out is still in its early innings, plenty of room to run. That could easily push the stock to test that $200, $215 level, send a wave of confidence through the whole tech sector, really.
Okay, now the flip side. Let's talk about the bear case scenario. What's the worst case outcome here? What kind of news would really rattle the market?
The worst case involves any clear sign of deceleration. That could be Q2 data center revenue coming in below that whisper number, say under $24.5 billion.
So missing even the unofficial target.
Exactly. But probably more devastating would be Q3 guidance that's just in line with, or God forbid, below that $31 billion consensus.
That would be brutal.
Oh, yeah. And any mention from management about a demand air pocket, a gap between the current Hopper chips and the next-gen Blackwell, or any noticeable dip in gross margins, that would be severely punished.
What kind of stock reaction are we talking?
In that scenario, you could quickly see a 10%, maybe 15% correction. Breaking below key technical levels, maybe around $160, investors would rapidly reevaluate that whole growth story.
So let's hammer this home one more time. That inline scenario. We said it's basically a bear case for Nvidia, even though hitting targets sounds good. Why is just meeting expectations such a problem here? It feels counterintuitive.
It does, but it's absolutely true in this context. Because the expectations are just so incredibly high, an inline report means that momentum narrative is broken.
The story changes.
Exactly. For those high-growth investors, the ones prioritizing exponential expansion, seeing things just level off, even at a high level, that's perceived as the first sign that the peak growth might be over.
For sign of a top.
That's how they'd see it. It signals that the unprecedented growth rates are normalizing. And the stock would likely trade down significantly as those growth investors look elsewhere. It really is a testament to the unbelievably high bar Nvidia has to clear. Anything less than absolutely stellar is seen as a disappointment.
It really puts things in perspective.
And if we connect this back, to the bigger picture, this report, it really is a referendum, not just on Nvidia, the company, but on the entire AI theme that's been leading the market.
Right.
The valuation, like we discussed, it just demands perfection. Any result short of that, it's going to get punished. What's really remarkable here is the risk reward. It feels symmetrically high, meaning the potential for a really significant gain is pretty much matched by the potential for a sharp drop. It is a very high-stakes moment for Nvidia and, by extension, for that whole AI investment thesis.
So what does this all mean for you, the listener? Well, this deep dive in just one company's earnings, it really shines a light on the immense pressures, the huge expectations driving the absolute cutting edge of technology right now.
Mm-hmm.
It's a fascinating snapshot, isn't it? How market sentiment, which is fueled by innovation, and what people think will happen in the future, how that translates into real-world impact. For innovation, supply chains, the direction of whole industries relying on AI.
And it really does raise an important question for you to think about. If even really strong, high-performing quarters are now potentially seen as a disappointment,
Right.
what kind of truly groundbreaking news or what level of sustained, almost impossible exponential growth is needed to keep fueling this level of enthusiasm, this level of investment in AI?
What does that imply for the whole industry going forward?
Exactly. Are we setting up a scenario where only absolute miracles get rewarded? It's something to consider.
It really is. Understanding these dynamics, these forces at play, offers invaluable insights into what's driving our economy right now. We definitely encourage you to watch these developments closely. The ripples from this earnings report, they'll be felt far beyond just Nvidia's stock chart.
No doubt about it.
Thanks for joining us on the Deep Dive.